All right, I was kind of avoiding this particular topic because, well, I've seen it shared out there a ton, and I guess it's now time that I give my spin on it. And the reason for that is my good friend Tom Story did something very similar on his social media, and I think his Instagram post about this topic was shared almost 600 times, which is kind of crazy. And then almost the exact same information comes from my mortgage broker at Citywide Mortgage Services in an email today with an article attached. So I thought I would kind of cover all of this. I've done a very similar type of video on this way back in the past on the channel, but this comes with today's information, so it's refreshed and updated. So I thought I would go over a few things with you here today. But of course, as always, if you would like to stay up to date on the Surrey and Fraser Valley marketplace, please go ahead and subscribe to my channel. It really means a lot to me to help this kind of community grow. And if you have any questions about the real estate market, go ahead and leave those comments down below. I try to get back to every single comment as best I possibly can. And while you're down there, it would mean a ton to me if you could go ahead and click the like button for the YouTube algorithm so this information can get out to even more people who kind of want to know where they stand in today's crazy real estate market. Okay, so let's first hop into here. Sorry, my contact lenses are on order. You're going to have to put up with glare in my glasses again. Let's hop into this news article that was sent out by my mortgage broker. And basically it's a survey done by Remax, I guess their corporate office, and they are expecting that home prices will fall 2.2% in the remaining months of this year. And, you know, the reason this is kind of sent to me, and it was kind of funny, is obviously we know that there's a very good chance in our market anyway, here in the Fraser Valley, that prices are going to fall for the remainder of the year considerably more than 2.2%. However, when any surveys are done, you do have to look at exactly what was surveyed, who was surveyed, and finding out exactly where your information is coming from. And in this case, it was Remax surveying their own brokerages in 30 different markets. And 24 of those markets came back saying, yes, we do expect a downturn. So when we're looking at surveys like this that come out, you have to remember that Canada is a massive country. And although we're seeing massive downturns in my local market here of Surrey and the Fraser Valley, even further out in the valley, it gets worse once you get into the Chilliwack Board region, or outside of Toronto, outside of right downtown, but, you know, the greater Toronto area is also seeing these massive turn back in prices. But the country is so much bigger than that. And right now you have areas like Calgary and Edmonton and even Saskatchewan. I don't stay up to date necessarily on those markets as much as I do my own, but my understanding is their downturn or their change in the market has not been nearly as drastic because they didn't see the upside that we saw. So I'm not really surprised by this news to think that, you know, yes, indeed, the market will come down, but not as a crazy overall, because there's one more thing that we have to consider when we're looking at the overall average sale price in the marketplace. And that is the sale price is calculated by taking all of the sales that happened that year and calculating their average price. And if I pop into my stat center here of my local market, you'll see the massive downturn that comes. But there was a massive uptick at the beginning of the year as well. And there's a large portion of the year now where we've experienced much lower prices. So there's a good chance that, yes, we're talking about two totally different things here. One, we could be talking about how far are prices going to be falling from the peak. How far will prices fall from here? Or what is the average sale price this year compared to the average sale price last year? Now, by the time this all comes out in the wash, I think we're going to see a 30 or so percent drop, maybe 35% drop in the average sale price from the peak. But that doesn't mean overall the average sale price compared to last year is going to be a drop of 30% or more. And then when you combine all those markets that are still doing good, of course, you're not going to see as dramatic of a drop because not all of the marketplaces are doing as poorly as mine is here in Surrey in the Fraser Valley. But now that housing here is getting so much more affordable, right? It has a lot of people thinking, okay, well, now I'm saving a ton of money. And this was a really interesting point. And this is what Tom shared on his Instagram that got so much attention. And I want to show you a comparison here in my marketplace of Surrey. And then we can kind of take those numbers and project forward and think where the market is going to go if you think interest rates are going to keep climbing. Which they probably will. And let me show you that here by hopping into this beautiful fancy spreadsheet that I have made for you. It's not very fancy. Okay, so if I bought in spring of 2022, there's a very good chance I'm going to think of my particular neighborhood where I am in Surrey that some houses were selling in a crazy amount at $1.95 million. The interest rate at that time was up and over 3%. Let's call it just over 3.25%. The down payment required, minimum down payment, is 20%. Now, here's where things get a little dicey. Nobody I sold a $2 million home to earlier this year had as little as 20% down. They had a lot more. And although in theory you can put down as little as 20% down, once you cross the $1.5 million mark, a lot of banks and a lot of lenders start requiring as much as 50% down on the balance thereafter. So likely that's your only down payment is very slim. However, look at that monster payment that's there. And for me, this is like heartbreaking to think that that's a payment that somebody can make. $6,800 a month. But let's say now you have decided to wait until this fall and your home purchase value has dropped a ton. Now, again, you're now probably also theoretically putting down 20%. I do think still there's a very good chance you're going to put down more than that. But let's say you are moving from a townhouse to a detached home. You're saving $400,000. There's a good chance that a bunch of your equity out of that townhouse has now also eroded. But your mortgage rate today is likely going to be a full 2% higher on a 5-year fixed rate. So now you only have to bring $310,000 to the plate. But here's the part that's shocking for everybody. Let me reveal your payment is still actually going to be higher, $6,800 plus. You're talking $30 more per month than if you had just secured a home earlier. Now, of course, if interest rates remain high for a record long period of time, you may be in a better spot financially if you pay the lower amount. But there's a very good chance, and historically, this has been the way it is. Even in the crash, now let me get this out there so it's perfectly clear. Even in the crash of 1981, when house prices went up 40% in a year and then immediately dropped that 40% of the year because of rapidly increasing interest rates, even then, the market from that peak, which saw a big dip, to the following when it evened out was 8 years maximum. And then 2 years after that, it doubled from the previous peak. So in 10 years, even in the worst market conditions we've ever seen, house prices still double. Just doing a quick edit here, and I realized I didn't also elaborate on this point that when those interest rates did spike in the early 80s, they did not stay up that high at 21 and 22% for very long. So there's a very good chance that even if we see an interest rate spike here in the coming years, let's say it goes something crazy like 10%, they likely won't be there for that long. So let's assume that's all fine and dandy. Here's the point. Your payment is going to be the same, and there's a reason for that. No matter what house prices do, there's something called GDS and TDS, which is your gross debt servicing ratio, meaning a certain amount of your income is allowed to be used for housing when you apply for a mortgage. And that percentage doesn't change. So in this particular case, to qualify for this much, you probably need a $225,000 household income. And yes, in this particular case, likely your basement suite income can count towards your yearly income. So let's say, for instance, you make a very good household income of $225,000 a year. No matter what interest rates do, the bank is going to approve you for a $68 or so $100 a month payment. But then that begs to differ the question of, where do we think rates are going to go? Well, if we do almost that exact same calculation again and put about that $6,800 payment in on, let's call it a 7% interest rate, then there's a really good chance that that $1.95 million home in the spring that is currently about 1.55, and that is about accurate right now, will be, whenever we reach 7%, will likely be about $1.3 million. So I guess the real question you have to ask yourself if you're thinking about getting into the market is, what is your guess, or what is your gamble on where interest rates are going to end up? Because if you are waiting for the day when you have a lower payment than you've already been guaranteed by the bank through any sort of a mortgage pre-approval, trust me, your payment is not going to change. The only thing that will change is the purchase price of what you can buy. And there's a very good likelihood in a marketplace like mine in the suburbs, where most people are mortgaged and house prices are very much influenced by interest rates, prices will probably fall in line with whatever happens with the interest rates. So there you go, a little food for thought. I don't know that this was any help to you today, but it is a very interesting perspective to keep an eye on, and I know a lot of people have been interested in it in the past. If you're interested, or if you have any questions, please go ahead and leave me a comment down below. If you need any personalized help in my market of Surrey and the Fraser Valley, go ahead and book a call with me right now down below in the description. Please remember to subscribe and click the like button. It means a ton to me. Thanks so much for watching, and we'll see you in a couple of days.